Good morning, everybody. This is the Saturday morning Viper trading webinar. If you are here to learn about trading the futures markets using the Viper tools, you are absolutely in the right place. First thing we have to do, of course, is get our standard disclaimer out of the way. Let's go ahead and knock that out. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. Okay, good. Now that that's out of the way, let me get over to a chart. You know, one of the things I wanted to ask everyone here this morning before we get into the trade setups themselves, I've got a Russell chart here. By the way, this is the second part of a two-part series. The first one was Thursday night, which is up in the subscriber area, and I think it's on the web. If it isn't, we'll make sure it gets up there today. So, and this will be posted too. This is recorded. So if you have to leave early or something comes up, you can always check the recording on it. But on Thursday evening, I covered a lot of the basics of trades. I went into what ranges are, how to trade ranges, trend trades, trend train setups. I talked about the background colors, the bars, the basic indicators. So all the basics have already been covered in part one, which was Thursday night. So what I'd like to do this morning, I have kind of an agenda that I have thought of. But before I get into that, I'd like to ask one question of the team here this morning. If you were to jot down one thing that is your most concerning issue, if you will, in getting into trades or taking trades or managing trades, if you could pinpoint one thing that's your top concern in trading, what would it be? I'm just going to take a minute and let everybody think about that and respond. What's the one thing that, maybe a different way to put it would be, was there one thing that if you could fix that, you think your trading would be perfect? What's your go-to concern right now in your trade, in all the things that you learn and try to do when you trade the markets? The one thing, if you were to jot that down. Oh, we're getting some responses. Hold on. Frank, I think I'll check with Gary today. I'll make sure that we try to get these webinars up today and Thursday on the web. We post them to our YouTube channel, and then the website now pulls them from the channel. So I have to make sure we get that done if it's not on the web right now. I know it's in the subscriber area, but I think you're on a free trial. So we'll get that fixed today, okay? All right, let me jot this down. We're getting some great feedback here. This is what I wanted. I wanted to really address what everybody is concerned about. Jim says, Trent, hold on, let me jot this down. All right, Jim is saying trend changes. Hold on a second. I want to jot this down. Okay. Trend changes. Okay, good. That's a good topic. Ken, always trying to pick the tops and the bottoms and not trusting what the trend is at the time. Okay, that's a big one. Picking tops and bottoms. Getting in too early on a retracement. Okay, that's a big problem, I know. Bigger stop outs. Okay, Paul, that's a good one. Entry timing, I see a lot of comments around entries. Pullbacks and retracements. Oh, Adam has this, that's a tough issue. I still take the breakouts instead of waiting for the pullbacks. Managing my stops. Billy, being able to take a small loss. Craig says, I'm thinking that I'm going to miss the next great trade. Disciplined to take the trades that I actually want. That's a good one. Chris says, mid-band entry often doesn't work for me when you have deep pullbacks. Okay, more comments. Mid-band, a lot of mid-band comments. Avoiding choppy markets, lack of confidence, trading too much. I'm always seem to be getting into a trade from Peter. Okay, good. We'll call that one over trading. All right, well, let's do this. Let's get over to screen one here and start to address some of these issues one by one. All right, we're on screen 1 here. Let's see here. Trend changes, top and bottom, retracement stops, over trading, and choppy markets. Let's see if we can address each one of these sort of individually. I'm going to look at different parts of this market, and we're going to look at it together here, and we'll try to, what I'll do is let's look at different scenarios on this chart, and then I'll drag other charts down from other markets, and we'll try to address them and pretend it's happening in real time together, okay? Now, if you feel that this chart is a little too busy with the predictor ovals on it, then you simply hide them like this. So you toggle them off, and then you can toggle them back on. Some people don't mind. The setup that you see here is essentially what you see in the live trading room. Okay, so that's what we teach, and that's what we use. But if you find it's a little too busy, you can just hide the predictor ovals like that. So for right now, I'm going to go ahead and leave them off. Now this was overnight on Friday morning on the Russell, so midnight Pacific would have been right here. Give me a second to orient this chart properly. Stand by. Okay, here we go. All right, so the overnight session would have looked something like this. Here's midnight. This is the European session right here. Now, one of the main things I think that's going to help everybody in regards to a couple of things, many things in terms of addressing the mid-band issue, the choppy issue, and the retracement issue, is that we have to train our eyes or teach ourselves to put lines on charts. I know it seems like such a simple thing, and I know Gary does it all the time in the room, but there is tremendous value to it, and it's going to help you visualize a lot of things that are happening. Let's take the pre-market area on the Russell right here. And I'm going to put just a couple simple lines on this chart, okay? We have a swing. We have some swings that were established, more or less up in this area right here. You know, you had one back here, you had one back here, and you have quite a few kind of sitting right in here, right? Below that, just under the mid-band, we have another area right here. Now, it only took a few seconds to draw those two lines, but I think you would have to admit that looking at this area, we all here today would agree that as long as that market stayed in that area, that we are in a range. I know that seems pretty simple, but how do you confirm that swing is in? Well, it's pretty simple, Brian. Let's pretend we don't know what's going to happen. Let's go back and pretend it's Friday morning. Here's midnight Pacific coming up. Prior to midnight, what did the market look like? Let's say that we're looking at the market just after midnight, and we're night owls, and we're looking at markets for trades because we're awake and we're night owls and we want to take trades. So before going into midnight, what did the market look like? Well, it looked pretty choppy, I think. You had a lot of resistance kind of sitting right up in here. Let me be more direct, Brian, and answer your question. By the time you get the second swing, and I'll show you how to do this, that you know that you're range bound and sideways. You need the second swing to do that. So what I mean was, here, let me draw this line too. Hold on. All right, and so support of your trading range is down here. So let's do a couple of these together. And I'll show you, and then I'll go backwards and I'll show you how you can do this. Let's pretend that you're not in the live trading room. You just have a chart up on your screen and you're trying to figure out what's going on. So we'll do that together. So here's this first swing, and here's the second one. As soon as the second swing is established, you know you're in a range. All right, let's go back and pretend we don't know. And it's the end of the day on Thursday. Okay, let me advance the chart. We're coming down. We were in a little bit of a downtrend here into the late evening on Thursday on the Russell. Obviously, you're trading retracements, taking shorts. We come up through the mid-band. We come up to this swing right here. See it? Now let's advance the chart. We have another swing right here. So let's pretend this is real time and you're just looking at your chart. As soon as you see this, now what you can do, I draw these lines here because I don't want to extend them out into the future, but what you could do is take this line right here and put it right where the swing is, like that. And you can take your second line like this and put them right where that swing is, right there. As soon as you see the second swing identified, irrespective of where it's located, you put your lines in, and as long as it remains in this band, then you are range bound. Okay? Let's keep going. Okay, here we spike up a little bit through it. Here we come back down, and now we put in a slightly lower swing. So in this regard, we have broken up through the top of it. And those of you who struggle with trend changes, we establish a new swing here. So for the purpose of this illustration, now we can take our new top line and more or less put it right here. Now notice, in this drop right here, we do not get back down. Let me blow this up. Stand by. Hold on. Now here's how you make subtle adjustments as it's occurring in real time. Notice that on this swing here, we do not get back down to here. So we are establishing a new swing. So this line goes up to here. Now at this point in time, you can take this other one, you can take this mid one away, because that's the new range. Really, identifying a sideways consolidation market is really literally that simple. There really isn't a whole lot more than that. You need at least two swings to be established, and you put your lines on the chart, and as long as it remains inside of those two lines, you are trading in a range. So then the question becomes, should you trade the range or not? And so that's my question to everyone here this morning. Should you trade this range, yes or no? Remember our criteria. What's our criteria for trading it? And does this conform to that criteria? Yes or no? I'll give you 20 seconds. 15 seconds. Yes or no? Just a simple yes or no. Should you trade this range? Yes or no? 10 seconds. You got to know this stuff. Markets aren't going to just sit around and let you think about it all day long. 5 seconds. Can you trade this range or not? Time's almost up. Remember our criteria. How do we decide? How do you know? We covered this many times in other webinars, right? Time's up. All right, now I'm going to help you out a little bit since this is the first time we're visiting this question this morning. The criteria is a minimum of 20 ticks, 20 to 25 ticks. We got to see at least that, or it's not worth trading the range. Support down here around 65-ish. Resistance just above 68. The range is right around 30 ticks. So in terms of size of the range, it is tradable. So the answer is yes. Second part of the two-part question. For your entries, is your primary mode of entry to get in by buying support or shorting resistance at the top of the range? Or B, both? Three different possible answers. To trade this range, is your primary mode of entry to B, buy the bottom, S, sell the top, or no, we have two B, or both? Buy the bottom, B, S, sell the top, or you would trade both sides of the market. You would buy the bottom and short the top. How would you approach this 30-tick range on the Russell if you were watching this chart on your screen and you had to make a decision and you have 20 seconds to do it? B, buy the bottom, of the range. So your primary mode is when you're getting in here, when it bounces, right? S, sell the top, so you're shorting up here. Every time it comes up, boom, you short it, short it, short it. And the final answer is you could trade both, shorting the top and buying the bottom. 5 seconds left. How would you approach this range on the Russell? Time's almost up. 3 seconds. Look at the range. Think about what's around it. What would be your approach? Time's almost up. Daryl squeaking an answer. Brian, Terry, good. Frank. All right, time's up. Well, interesting. Most of you, we got quite a few buys. So most of you, a good chunk of you here this morning are buying the bottom and taking profits, scalping profits at the top of the range. Good. A lot of you said both. Ken, Jeff, Peter, and Billy, and Jim all said both. A lot of you said both. Now, what I like about this range, a couple of things. Here's a good way to think of it. Here, sort of a rule of thumb that I use when looking at ranges is if the primary trend direction for the underlying market that you're looking at, if that trend direction is up, in other words, generally speaking, you're getting some higher swing highs and swing lows, then if you get into a range, then the prevailing entry is going to want to be buying support. Okay? If the prevailing trend direction is down and you get into a range, then for the most part you're going to be wanting to short resistance. Because the thinking there is that once it breaks out of the range, it's going to go ahead and continue in that direction, right? So you want to be in the favorable, correct direction when it breaks out. That way you don't get stopped out on that final trade. Now, if there is no trend, in other words, it's not clearly heading up with blue bars and green background and higher highs and higher lows, and you get into a range, and it's not heading down, it's just flat sideways, that is a good candidate of a range to trade both sides. The other considering factor is, of course, it's got to be over 20, 25 ticks. This is 30 ticks, so we're good, is the fact that the top and bottom of the range are fairly clean and well-defined. In other words, can you see this area right here? This area of sort of choppy bouncing around would really be not prone to good range trading like this. See, because you have this swing up here, a couple of them, you got this huge spike kind of down right here, you got another one up here, this breaks the mid-band, not very clean, right? Whereas over here, you can see we pretty much know resistance is here and bottom is down here. All right, now I'm going to ask one last question, then we're going to advance and move on this range, because this is the final important part of range trading if you choose to do it. If you find the support and you're buying the bottom is at 65.10, where ideally would we put our buy entry? So down here, if you said that you're going to be trading both sides or buying the bottom, and we know that the support level is right here around the 65.10, where would we put our buy entry? Now, we could use the tools, okay? We could put a region box around it. We could put a sniper line there. There's all manner of different ways to do it. But I'm trying to address something that we call out in the room all the time called fading. So everybody in here should know the topic of fading. And I'm checking to see if you do. So if support's at 65.10 and you want to buy, where's your buy going to be? Right at 65.10? You got 10 seconds. 10 seconds. Where's your buy order at the bottom of the range? Time's ticking down. Checking your knowledge of the term fading a swing. What does that mean? Where is your buy? You have 6 seconds left. Where's your buy order going to want to be? Bottom of the range. 4 seconds. Because that's how much time you might have in real time when this market's shooting all over the place and you put these lines in and you're trying to make a quick decision. You've got to have that right in your subconscious, ready to go, right? You can't be sitting around. And in the question earlier, many of you said, trying to find trade setups and entries. Well, you might be sitting there staring at it too long. You got to just, boom, you got to know once you see it. 2 seconds, time's up. All right, so the topic of fading, let me blow this up so we're all on the same page here. And this might be a challenge for a lot of you here, and that's perfectly okay. When you see a swing that's been established and you're looking to get in, you want to go at least 3, 4, 5 ticks minimum above the swing for your entry. So in this case right here, if you said anywhere around 65.40 to 65.60, which is 3 to 5 ticks above the swing level right here, that's a good answer. Let me see what you got. 65.14, 65, okay, 65.10, 65.3, 65.60 from Chris. Good, that's a good answer, Chris. Good answers, all very good answers. Yes, 3 to 4 ticks off the bottom, Daryl. Yeah, so that's what fading is. So if those of you who are shorting the top, your entry would be 68.10. Swings at 68.50. So we're looking to come up, have it roll over, and we get in the trade. Fading the top and fading the bottom. Perfect. Final questions on this this range. Okay, so let's play the scenario out. So we needed 1, we needed 2. Here's our buy, here's our short. Here's our buy, here's our short. Here's our buy, here's our short. Now those of you who were, so you got 1, 2, 3, 4, possibly 5 trades out of it. The 6th one stopped out. So here's one thing to be, and by the way, that's nothing to sneeze at. Let's do some quick calculations before we leave this. Okay, so you're shorting here and getting out of your long, and you're buying here at support. We said we were going to get in at 65.60, so it's right about here. We didn't get this one because we had to establish the swing. We more or less kind of knew this swing because there was a swing here. So the first trade was here. We had 1 long. We had 1 short. We had the second long right here. See why you want to fade it? Came right up to it, right? See it? Second short. Third long right here. And then the final one stopped out. So here's how you handle the final trade. Let's talk about the final trade, and then we'll wrap this up. When you shorted this here and you got, it looks to me like a couple of 5, 6 ticks on it, okay? This is what's going to happen. Eventually the market's going to come out of the range. It just is. It can't stay in that range forever. It's going to break one way or another. It's either going to go up and take off, or it's going to break down and go short, or it quite possibly could go into another range, but it's going to come out of here. And generally speaking, if you're trading both sides of the market, that last could be a loser. Now, the way you prevent that from stinging you too badly is that when you get in here and your initial stop, this is speaking to the stop issue. Say it's 12 ticks above your entry, so you're looking at right about here on your stop. Now, if you have 2 contracts on, most of you know how we trade the 2 contract deal, right? After you get 5 or 6 ticks on your first contract, you peel the scalper and you take your stop and you get it 2 ticks behind your entry. Object Trader can do this for you with the tool. You set that up. We've shown that many times, right? In this scenario here, if you got 5 or 6 ticks on the first pop, that second contract would take a 2 or 3 tick stop loss right here. So you don't have to take a full stop out. Those of you that had questions before we started here about stops, you don't necessarily, I've seen scenarios where people do this, and this might be some of you here, is you put it, you set the thing up with a target and a stop. Say your target's down here somewhere, right where we said it should be on your short. And then you just kind of let it sit there, and then there's no sort of management of the trade, and you just say, well, kind of hands off, well, it's either going to hit the stop or the target. It's either going to go down here and hit this, or it's going to hit that. Either way. Well, what I'm suggesting is something a little bit different in the fact that you have to let Object Trader or you manage your trade so that once you get up on that first contract, take the quick scalper profit and get that initial stop from 12 or 10 down to 2 or 3 behind your entry. Okay? Depending on your instrument, you're going to have to learn how to manage that. That's going to help you from taking full stop outs. If you did this little thing right here. All right, how much money did you make here? Let's say you just used one contract. Let's see how much you make in the middle here. 65.50 to 68, 67. What do we say? 67, 68. Let's use some round numbers. 15 ticks. 1, 2, 3, 4, 5. 5 times 15 is how much? 15 ticks for 5 trades. You made somewhere around 70, 75 ticks, plus or minus, depending on your fills, slippage, and what have you. $10 a tick, one contract. You made $750. Not bad for a couple hours, for an hour and a half work. So what I'm trying to show, and the reason I spent so much time on this range, is that, you know what? I know many of you, and I've spoken with many of you, and we've done this in webinars, is you don't like ranges. A lot of you don't like ranges. I understand that. But you have to realize that many, many times a market will go into a range. And if you can quickly identify what the top and bottom are, see if the size fits your parameters, decide if you're going to buy the top, your entry mode, buying or shorting, or both, and then get in there and intelligently trade that. You can make a lot of money trading these ranges, I'm telling you. You don't have to wait for a trend. You can trade these ranges and make very, very good money. Okay, let's change gears to another instrument. I'm going to drag down. What do you want to see next? I've got YM, I've got the NASDAQ, and I've got crude. Spin the wheel. What do you want to see? Your choice, and I will drag it down the next chart. Let's get on to another chart. By the way, did that help looking at that range? I know I spent half the webinar doing that, but I really wanted everybody to understand, because there's this question, how do you know in real time what's going on? Well, that's the way to do it. Make sense? Yes on the range. Okay, good. All right, we got quite a mix here. We got a lot of crudes, we got some YMs, and we got a couple NASDAQs. Okay, tell you what, let's get, we'll take it in order then. Get the Russell chart off of here. Let's get the YM chart down here. I'll make sure we get all 3 in before we wrap. Now I'm going to test your knowledge and skill sets of trading, and I'm going to do it rapid fire, because that's the way of the real-time market. Yeah, I love the YM. It's one of my favorite instruments. It's my go-to instrument, to be honest with you. I like how smooth it is. I can really leverage up on it. It's fairly clean in how it hits support and resistance levels. But that's just me. I mean, you got to find your own instrument that you like. Okay, we're gonna pop some trades up here, and you're gonna make the call. And you get 20 seconds per trade. Ready? 20 seconds each trade. I'm gonna start off very, very, very straightforward, simple trades, and I'm gonna make them, and then gradually, as we get into the next half an hour, I'm gonna make them much more complicated. Ready? We're gonna start off easy. Right-hand side of the chart on YM. Is this trade a long trade or a short trade? Eyes are focused right here. Right here. Long or short? $15 seconds left. Everybody gets 20 seconds on the trade calls. We're going to go rapid fire. Time's almost up. 5 seconds. Right-hand side of the chart. Our eyes are focused right here. Question is this a long or a short trade? 2 seconds. Time's up. Long trade. This is a long trade. How do we know? Now, this is getting back to some of you who put in this whole trend change issue. I'm going to address several things on this trade, many of which were concerns that all of you espoused before we got started here. I'm going to blow this up. How do we know that the trend has changed from down to up? Let's walk through it together, okay? Because I know this is an issue for many of you. Now, before this even happened, and this is after hours, so it's different than the morning, and it's different than news, and it's different than an open. But over here, hold on a second, please. Give me a second to adjust this chart. There we go. Getting a little woolly on me there. To the left here, and Gary says this all the time, and I like that. I like the comment of look to the left to trade the right. So, here we were going down, right? We broke down, we come up, we get a nice retracement trade that didn't quite get to the mid-band, rolls over, fresh lows, nice short trade. Now, notice what happens here. This is a price. This is some price patterns that if you can kind of burn into your subconscious, that are going to help you a lot. Okay, and it's as follows. When this market comes back and consolidates at the mid-band right here, the market has a couple of choices in direction it can go from here. It can go up, which is the way it went. This is a critical point for it because if the downtrend was going to continue, it would have had to break here and go like that. Yes? So let me help you. This is how I look at it when I'm looking at it in real time. That's how I look at it. There's certain swing and decision points that markets kind of go through when they're kind of deciding what direction they're going to go. Even more telling than the fact that this mid-band box did not break down, we had the following occur, and try to remember this pattern right here. Notice how it comes out of the top of the box. That's not so much important. That does not determine a trend change. However, notice what it does here. It comes down and checks slightly above the bottom of the box and then goes up to take this swing out, like such. Is that a trend change, yes or no? Background turns green, bars turn blue. We have second higher low and higher high, third, second, higher low and higher high. Takes this swing out, takes that swing out, goes up almost through this swing. Is this a trend change, yes or no, right here? 5 seconds. This is how quickly you should be able to identify this price pattern you're looking at right here. You should be able to look at that and instantly, like in a nanosecond, in the subconscious of your mind, know instantly if it's changing trends or not. Because if you can't do that, that's why you're struggling with trend changes. Came up, hit the mid-band, punched through it, another higher low, and then got a higher high. Background turns green, bars are blue. Is it trend change or not? Yes. Yes, it has. Okay. Now, some of you could say, well, until it comes up here and, we get some follow through and I'd still be shorting it up in here. That's perfectly okay. Look, the world is made of a lot of different types of people and a lot of different traders. Some of you would still be shorting it up here, and that's okay. In my personal view, I would now be looking for long trades because of what I just said. You have higher lows and higher highs, and the background has changed. The bars are blue, and we're swinging up. So now I'm looking to buy pullbacks. So when you hear that in the room, that's what we're saying. If we were shorting markets, short, and we're shorting, and we stop out, and we punch up, and then you might hear something like, well, now I'm looking for longs. I'm looking to get long on pullbacks. Then that essentially is saying that the trend has changed, and you're looking for longs. Now, let me address the secondary issue here. The secondary issue for many of you before the webinar was, how do I know when to get in on a retracement? Isn't that a huge concern? All right, I'm going to help you with this one. And then the next one I'm not going to help you with because I'm going to expect you to remember this. There's another thing that needs to kind of get ground into your subconscious. When we think about retracements, how do we think of them? Many of you are going to say one word, mid-band, and I want you to do a favor for me. It's important to think of the mid-band as a potential area for a market to go to on a retracement. However, we all know that there's 3 different scenarios that can play out on a retracement. 1, a very shallow retracement that doesn't come very deep and bounces. Right? This should sound familiar to all of you who come to all of my webinars. 2, mid-range retracement scenario where it does in fact come down at to or right around the mid-band. Middle depth of retracement scenario. Number 3, a deep retracement that goes beyond the mid-band down into this area or even deeper and then bounces. So I want everybody here, when we look at retraces next week, as the markets are unfolding in front of us in real time, to think of an area around the mid-band. Not the mid-band itself. It's perfect if it gets there and sits there for a little bit. That's the ideal trade, yes. But markets don't always do that. Here's another scenario here where it came right to the mid-band and bounced. Perfect. So you do get these. Right? There's one right there. There's many of them. They happen all the time. But it doesn't happen like that all the time. So we have to be ready for any 3 of the scenarios that could play out. Shallow, mid, deep. Now, I'm going to really blow this up and ask this question. How do we know to get in the trade? Okay, here we're sitting on the mid-band. I'm going to draw a line like this. This is our retracement line. This can be either the line tool or the ray tool in Object Trader. Now you tell me when you should get in this trade. Just type in an N for now. Ready? Okay, let's start the retracement. Here we go. We're coming down. We're coming down. Sitting on the mid-band. I'll go bar by bar. Just hit the mid-band. Sitting on the mid-band. Popped up above the mid-band. Broke the retracement line. Another bar. Up. Above the previous bar. Well above the mid-band. And above the retracement line. Another bar. Above the previous bar, continuing up towards the next swing. All right, time's up. The entry bar was right here, and most of you caught it. I see a good chunk of you caught this. This is the entry bar right here. So when somebody says, I'm looking for, here, let me just play it out. Let me play it out this way. If you get a shallow retracement and the market only comes back to here, and it's a strong, powerful uptrend, and you get a reversal bar, you know, like up in here in this shallow depth retracement area, and it bounces, you can take that trade. Keep an extremely tight stop on it in case it bips up here to this swing and then rolls. If it comes down to the mid-band, which we love mid-band trades, and you get a reversal bar like you did right here, that is the entry bar. You can take a reversal bar, you can have a sniper line, you can use the line tool or the ray tool. There's all manner of different tools to get in here. The bottom line is you got to pull the trigger and get in right there. Okay? In the event that the market did not bounce at the mid-band and the retracement continued deeper, in the third scenario here, playing out down into this depth, sort of deeper retracement, and then you get a reversal bar, that would be, wherever that occurred, would be your entry bar. I'm going to pause for a second. Does everybody see this? I'd say that out of all the things that we talk to traders about all day long, calls and Skyping and webinars and what have you, even in the live room, this is probably the #1 issue for most traders, is seeing this entry, how and where to get in on a retracement trade. So before we leave this, I'm going to do many more of these because I want this to just be crystal clear come Monday when you start trading. Here, I got some questions coming in. Yeah, Hevad, this is these are candlestick bars. So when we say bar, it would be the candles. Yeah, the bar, candlestick. Brian, yeah. So this is in this scenario with the circle bar here. This is both a reversal bar and it comes through the retracement line. Yeah, so that's your entry. I can see it clearly when you break it down like this. Okay. Jim, what's your targets on this? Okay, so here's how we would play this scenario out, Jim. Is that if you can, we like to have 2 contracts minimum, especially on YM or NASDAQ. Here is the established swing at 73 for this push up here. Now remember our approach is we fade swings. So we're not going to put our first target right at 73. We're going to fade it by 5 ticks. So we're going to look to get 68 on the scalp. In other words, the first contract's going to be peeled off in here somewhere, right? So we get in here and our first contract is taken off right here. That's our scalp. Generally, that's going to want to be around the 5 to 6 tick area. Once this occurs, on our because our first stop was stand by a second here. My chart's getting a little squibbly do on me here. Just give me 1 second. We gotta fix my chart. What the heck? Okay, it's fixed. You should see. You see my cursor again moving? Everybody see my cursor moving now? Yes. Okay. All right. So our entry bar was, let's say we got filled at 54 right here, 54-ish on the top of the close of that bar. Below 54 is 12 ticks. So we're looking at what would that be? Down here, 42 with a 12 tick stop. That's our initial stop. We pop up, we get ourselves 5 ticks, we take the scalper. So what I'm saying is explicitly, just to be clear, you're out of the first contract if you get anywhere up here. And then we set our break even to come up 3 ticks behind our entry. So the 12 tick stop goes from here up to here, right? And let's play it out. Okay, here we go, playing it out. We get the pop, comes up, comes back, comes up, and then goes, and then it kind of grinds its way up higher. Does everybody see that? Frank, he's Frank asking if you would have actually boxed these candles in here. Here's the thing about boxing at the midman. It really is a function of how much time it spends down there. If you find that you get a couple of 3-4 candles for maybe a minute or two where you have time to kind of think about it and watch it, yeah, you could have, it depends on how quickly the market's moving. That's probably a better way to put it. If it's a rapid moving market, you have to get in on the bar reversal. 1719. This box right here. Well, it's hard to say. He's asking. I think in the scenario that was playing out right here, you probably had a bias to the downside because when that box was painting, you would have came to believe that it was in a downtrend and you were looking for shorts. So in this scenario here, you probably would not have caught a long trade out of it unless you didn't have a bias and let it take both sides of the trade, right? Because as this was playing out, down, down, fresh low, red bars, red background, downtrend, we're thinking down. So we're thinking that it's going to do this. Probably when you drew the box, you would have had a downward bias, taking shorts only. So, would you have gotten the long trade? Probably not. All right. But then when it broke up to the swing, and now we got the fresh swing high up here with the green and the blue, we've come to believe that the trend has changed to up. Now we're looking for retracements to buy in. Does that answer your question, Frank? This box right here? Carl, yeah, in less than a minute. That's what I'm saying. In fast-moving markets, this must have been some news that happened here. So this is actually, in reality, this market was really pumping. I mean, you're looking at just a few minutes for all these bars to shoot. So, this really happening in real time would have been tough. I'm using the chart to explain the details of trade entry, though. All right, what do we want to see next? Let's move on. I don't want to run out of time here and get stuck on this. We got to squeak NASDAQ and a quick some oil trades in. Let's get let's go ahead and pop oil up. I don't want to spend all day on this trade because I have much more that I want to cover before we run out of time here. Let's get crude up real quick, and then we'll pop NASI before we wrap. Is everybody following what I'm trying to, if I can, as much as I can, break these trades down so that when you see these patterns set up in real time on your charts, you'll know what they are. Let's take crude from Friday. All right, I'm going to move quickly. I only got about 10 minutes left, and I got a lot more I want to cover. So I'm going to rip through some trades pretty quickly here, okay? I'm going to give you 10 seconds on each of them. 10 seconds on each trade. This is going to be very quick pattern recognition, and you're going to make the calls. Crude oil. I'm going to take the predictor off, and here we go. Ready? Here's the first trade. This is going to be an L or an S. Long or short? We're focusing on the right-hand side of the chart. Right here, just an L or an S. L or an S. That's coming right up there. L or S. 9 seconds. Two seconds. Time's up. Short. Good. Everybody got that right. Nope, we got one long. No, this is definitely not long. Look at the background color. Look at the bars. Look at the swings. Okay? That's why it should only take you a couple seconds to see this, right? This should be ingrained in our brain. We've come down through the swings. The background is red. The bars are red. Lower lows, lower highs. We come up. We miss the midband. We roll. Fresh low. We come up. We hit the midband. Rolls over. Back down. Short trade. S. Good. Here we go. Scenario number 2. Crude oil. This is Friday morning. That turned out to be a monster trade, by the way. And that was at 6:30. Just before 6:30, the equity mark. By the way, right here. That's how that trade turned out right there. That was a monster trade. You know, if you got in on the rollover anywhere here at, say, 30, 40-ish, it went all the way down here to 32.70. That's a 70-tick drop right there. See it? That could have been your one and done. Put a contract or two on that puppy. You'd be going to get some breakfast after that one. By the way, and for some of you that are new, just visiting us, I know we have quite a few people on a free trial. We got the open house thing next week. You know, our goal is not to go in and take as many trades as we can in the morning, okay? I know Gary and I call out a lot of trades in the room, but the fact of the matter is you don't have to take all those trades. You have to just sort of just patiently wait, identify a certain trade type that you like. Make sure you got one or two good instruments that you like up in front of you with the charts. And then when the trade sets up and you like it, go ahead and take it and then manage your targets and stops. It is possible to take one or two trades and be done in the morning, early, like the first half an hour. That is what our primary goal is. Certainly within the first hour, you're going to see at least a few opportunities cross your path. And when you see them, you step in, you take advantage of them. And you know what? Here's the thing. You don't have to go in there and say, I'm going to make $10,000 this morning. I'm going to make $5,000. I need to make $1,000. I need to clean up this morning. No. Tell you what, start very modest. Excuse me. I've spoken with traders where I suggested, you know what? Just try to get in and make 50 or 100 bucks. Maybe you just go for 10 ticks. Because here's what you're trying to do. You're trying to just fine-tune finding that good entry, getting in, maybe feeling a little bit of heat, not stopping out, and managing your targets and managing your stops. That's the skills that you're working on. In the beginning, it's really not about the money. It really isn't. It's about trying to get the skills to do the trading properly. Once you master those skills, entries, and management techniques, the money will come to you. It eventually will come to you. And then you can leverage up and put more contracts on. That's how it works. But what's going to be tough for you is if you're so hyper-focused on the money, I've got to make some money, got to make some money, got to make some money, what's going to happen is you're going to overlook the techniques that you need to learn. Okay, we got a question coming in from Chris. Chris is asking about reversal bars here. Hold on a second, please. No toaster coffee. I want the full breakfast. Okay, Jim. Let's see here. How to read a real reversal bar. Okay, Chris. Tell you what, that's what we're going to do. We only got a couple of 5 minutes left here. Let's spend some time looking at that. All right, let me clean this chart up. Let's look at, because I can tell right now this is a huge issue for almost everybody here, and we're going to really focus on this right now, the reversal bar entry. Okay? You want to spend the last little bit of time talking about that? I think some of you do. First of all, not all trades are going to work out. There's going to be some losses. Okay? We have to accept that. I know that some of you earlier in the thing here said, I'm trying to be perfect and pick the tops and bottoms. The way we want to try to get away from is we have to realize that we're human and we're not perfect. You're never, ever going to get a top or a bottom. Okay? If you do, it's like hitting the lottery. It was luck. It wasn't skill. Almost nobody can do that because nobody knows ahead of time where a market's going to go. Now let's define what a reversal bar is. What is a reversal bar? Let's blow these scenarios up. Now, first of all, you have to realize that when we talk about reversal bars, in regards to retracement trades, it is critical to know that they need to occur within the sweet spot of where we are looking for a trade. That make sense? Let's look at some scenarios that didn't work out. How about this one right here? Here the market was going up. This is perfect. I want to talk about this because this happens a lot, and this might happen to you, everybody here. Okay, here the trend was up. We get a trade here. Here's what I want to look at. Two things. And I'm going to show you a couple of different approaches, and you're going to have to adopt the one that works for you. Here we have a scenario where the market came down to here. We're just under the midband. The trend is still up, and you could make a case from a reversal bar point of view that the trade entry was right here. Does everybody see that? Retracing, 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 retracing. We get just under the midband and we get a reversal bar. So that would be your entry bar, yes? From a reversal bar entry point of view. Now, did this trade work out? Well, probably not, because I don't think you even got a scalp out of that. That looks to be about 2 or 3 ticks, and then you come down and it takes out the bottom here and looks like it gets into a trend change. So this is a trade that didn't work out. Now, the other way to take this without using bar reversal would have been to use our retracement line technique like this. Under the retracement line scenario, did you ever get a trade? Here. If you had used the retracement line entry. Did you ever get a trade, yes or no? Under that scenario? No. Because it never came up through it. Everybody see that? So if you're looking for retracement trade entry techniques, there's lots of different ways to get into the market. You could just punch a market order. You could put limit orders. There's all manner of different ways to get in trades. But when in regards to retracement trades, the two primary entries would be bar reversal and retracement line. You're going to have to work with these entries using the tools to find out what works best for you, your personal trading style, and the markets that you trade. Excuse me. Over here, where is the reversal bar? Excuse me. Hold on 1 second, please. I got this little tickle in my throat. You can make the case that this is the reversal bar right here. Because here you have a doji, right? Here we have a doji candle that comes up, sort of a gravestone doji, and we roll over right here. So the entry on a reversal bar is right here. In the scenario of this retracement, it's really not prone to be able to draw a retracement line unless you drew the line like this. In which case your fill would have been on that bar. So here's what I would suggest. If you have some spare time this weekend, here's what I would strongly urge everybody to do, even if you can only spare about 15 minutes. Take the instrument that you like to trade. It doesn't matter what it is. It could be 6E or the dollar. It could be gold. It could be anything, okay? And what I'd like to suggest that you do is study the chart patterns on it. What I mean by that is go back to where you would take trades. The entry of the market, 7 a.m. Pacific, high energy time. Study the patterns that occur on the chart. Do you find that they respect support areas? Do you find that they come back to the midband frequently and set up a nice region box? Do you find that they tend to go a little bit beyond the midband in retracements? Study to see whether you can see where trends are changing. You can use real-time market replay, or you can just simply advance the chart like this, back and forth. See it? That's all you need to do. Play the scenario out in your head, because you know what it is? It's screen time. I don't know how many, between Gary and I, we probably have 20,000 hours of screen time in 20 years. Who knows how many? Tens of thousands of hours, no question about it. So it's easy for me, and I take this for granted sometimes, the markets come up and the trades kind of jump off the chart at me because I've seen a million of them. So that's what you need to do. We need to take some of our time and we need to go in there and we need to study these charts. We need to let the market just move around a little bit and run the scenario through your head. Okay, it came up here. What would I have done? Okay, here I would have shorted it. I would have shorted a rollover. Shorted a rollover. Comes down, doesn't double bottom, comes up through the swing. We get blue bars, pulls back, holds the midband. We might now be heading up. See the background changing and the bars turning and holding? Punches up. Now I'm looking for retracements. Okay, pulls back here. This is a shallow retracement. Looking for a bar reversal. There it is. Run the scenarios through your head. Let me see here. Peter, you could have boxed the midband in around 20 with no bias. Yeah, there's different scenarios. That's what I'm trying to show, Peter. If you can pull your chart up, put the tools on it, and then run some scenarios through in your head. And once you start to really, really recognize, we have a lot of, I don't know, you've probably heard in the room, a lot of traders say, okay, I watch the charts, I've seen this, I've been to some webinars, the bell has gone off, I'm starting to get it, I see how this works now. Yeah, Frank, we'll make sure we get it. You're a trialer, you're not a subscriber, and you want to see it on the web. I'll talk to Gary, we'll make sure we get this up, the recording on the web. It'll be on YouTube, we'll put it on our YouTube playlist. And then what happens is here, let me show you how this works before we end the webinar real quick here. Let me just show you how this works. All right. If you go to our website, we have a lot of people on with a free trial or visiting right now. Click on this webinar link. This is our new website. We just finished rebuilding our website. We got a very nice, beautiful new website here. On the recording link, the way this works is these recordings are actually pulled from our YouTube channel playlist. So when we put the Thursday, we'll probably put Wednesday, Thursday, and today's up, and that will put them on our playlist, and it'll fill these 3 slots right here, and the older ones will move down. That's how this works. Okay, so give us a few hours, and then we'll make sure all the recordings get up here up to date, so that even if you're on a trial, you can. Yeah, I don't know if you can see the playlist on the YouTube, but you can go to our YouTube channel and vipertradingsystems.com, and all our recordings will be there. I think there's 200 recordings up there now, something like that. maybe more. All right, let me stop the recorder. Thanks for coming, everybody. I appreciate your time.